What's going on, everybody? Chart Guys Lamont here for another market update. I think we will be back to our regular schedule next week. So, without further ado, let's get into it. Okay, so starting off with SPY here, pretty much the way that I would interpret this session is this day pretty much caught all the sellers in these prior few sessions off guard. If you look from a volume profile perspective, this is just every single session applying a volume profile, I should say, to every single one of these sessions. You can see that for the last 5 sessions prior to this one, there was a reasonable amount of overlap in the value areas. Okay, this day technically there's no overlap from session to session, but you look at it and it's overlap with these 3 prior sessions. So basically, I'm viewing all of this as just some sideways trade, which is exactly what it looks like on the daily time frame. You see all of these sessions with a ton of overlap. And so the gap up open today will pretty much caught all the sellers off guard here, right? And so the objective now for the sellers would be to get back into this 5-day range, which as of right now, they didn't do a great job of, right? They had the potential to fill the gap here, and they failed to do so by just a little bit. Just a few cents, 24 cents or so. And so it's a notable failure, right? Because again, that the first objective is to fill the gap. So the fact that it didn't fill the gap is a very notable failure. That being said, in order for these buyers to really get back on the offensive here, they need to break back over 555.83, okay? Because this is the low of the supply. I thought I had already drawn this up. Give me a second here. Here we go. So the goal for these buyers now then is to get back over, let's see, the value area low of this structure here, 556.43. There's a decent amount of volume traded here, roughly 555.5, I believe. Yeah, roughly, actually, hold on a second here. I think I typed this wrong in our chat, but roughly 554.5. And then if they can clear this high volume area, then it's all about this supply over here. So the low of this supply is key, 555.83, and then the value area low at 556.43, then 557.16. All right, so basically more acceptance over 555.83 means that this is no longer functioning as an excess supply, and that would just mean that these buyers are slowly absorbing all that supply, and they need to absorb all this supply and then some in order to overcome it and then break to new highs. Okay, so that is pretty much it. You could, I wouldn't call this a price action trend change, but I don't really, I'm not really prioritizing that. I just want to see these buyers now ideally hold over 550.28. That's the high of this area now acting as demand. And if they can't hold over 550.28, they're still okay defensively as if they can hold over the value area high at 547.29 and the point of control at 544.72. Okay, so if you get a situation where you pop into this supply here, because there's still a bunch of earnings, right? So whether or not this reaction to FOMC sticks, which wasn't really much of a reaction, that it was really more like a strong session that wasn't negated by a bearish FOMC reaction is probably, a better way of describing it. So anyway, my point is if you pop into the supply and you don't see follow through over it and then come back into this range, then you're probably looking at a situation where we're going to balance under this guy and over this guy. All right. So basically more indecision. So we shall see. A bunch of major earnings left this week. I think Apple. And I forget. 1 second here. We still have Apple earnings, still have Amazon earnings, and that's pretty much it for Fangman T. But obviously Apple's a big one, and that's tomorrow, I think. Yeah, tomorrow. Okay, so that's pretty much it. Moving on to the Qs here. Okay, so for the Qs, you call it for what it is. It was the best day of 2024, but at the same time, how much change has it created relative to even just this most recent breakdown from this daily no change level? That's 473.94. This was the most recent breakdown from an area of support. So even though this was the best day of 2024, it really hasn't created any meaningful change on the daily time frame. On the SPY, you could certainly make the argument that this is looking better, right? Because they broke under this area of demand and now they're finding acceptance back over it. QQQ, they're still under this supply over here. They have not even broken over the daily no change level, and they didn't close over the lows of this range. So right now, what we care about is can these buyers get back into here? Okay, so as of right now, they've not done such a great job of that yet. Tomorrow, if this rally were to continue, and really the primary objective here is to get over 480.91, the point of control of this area of supply. If they can overcome 480.91, then the odds of this structure flipping into demand, of course, would improve. Have this one marked up better over here. So the key demand zone is this guy over here. You can see how price dips into it a few times, fails to get into the point of control, and now they're trying to rally off of it. And that is pretty much it for the Qs. Moving on to, I just want to say bigger picture, these charts look totally fine, right? Potentially just setting a weekly higher low. QQQ, if you don't count this little rinky-dink weekly higher low, then potentially just setting a higher low here as well. Monthly retracement so far being fended off. So the SPY and the Qs so far. All right, moving on to the Dow here. So the Dow, another daily higher high here, but not a new high over 413.86. Space for a daily higher low to be set. Anything over 398.08 is going to be good for one. I maintain that this is a very reasonable trade zone, especially now. You'd probably get hourly oversold conditions if you were to start drilling right from here. You'd probably have this line meet roughly where that point of control is. Oops, that's the... Yeah, it would be oversold. If you were to drill right from here, you definitely will be hourly oversold into this area of demand. So I think this is a very reasonable one. Wouldn't be for a daily higher low, but basically it would be for a play holding over all of this demand here. All right. So that's it. IWM. So IWM pop and drop here over this super key resistance. So I think we were talking about it yesterday. IWM, what we're watching now is all of this supply left behind from 2021. And within all of this big old supply over here, you have this structure here and this structure here that we really care the most about. This one is the local supply that these buyers are trying to trade through right now. And they did pop over the high of that, over the high of this supply here, and they filled the gap. This gap was filled that was left from way back when. And then you fell back into range. So essentially you have a look above and fail kind of situation, increasing the potential that we're going to rotate back down to the lows of this range. Because whenever you get a higher high that doesn't see follow through, you should expect the other side to try to respond in kind, which is pretty much what happened here, right? Higher high, no follow through, test the lows, okay? Lower high, higher low, higher high, no follow through, test the lows, right? If you lower low, below this low, no follow through, test the highs. That's what balance looks like, So I would not be surprised if now that we've seen a look above and fail, if we were to then rotate back down to the test of these lows. And if we were to lose these lows, then I'm personally very interested in looking for plays off of this structure over here. This guy that's been so reactive, that was reactive so much throughout 2021, that was reactive throughout 2022 as well. And then in recent history, very reactive. We actually set up trades for that on the weekly swing report videos, the update videos or whatever. We set this guy up. We set this guy up as well. So this one was set up on this move. This one was set up on this move, and they worked out quite well. So yeah, why? Because, and we got this one as well. Why? Why did we do that? Because they're just balanced plays. Like if you know that price is going to be balancing because you have these two key references, just like it did in the past, well then of course the R multiple is best if you're playing off of the extremes of the range, which was being set by these old references. Okay. So that is pretty much it for IWM. Moving on to the dollar here. So the dollar, daily higher low, higher high, no follow through, pretty much a picture perfect rejection from this daily no change level, 104.475. As long as these buyers are not finding acceptance over 104.475, then they should be trying to make their way all the way back down to this prior area of supply now acting as demand, which is what made for this major low back in 2023. Made for a ton of major lows, honestly, throughout 2023, and also one in... Nope, those were all 2023. The year of, this was the structure of 2023, I guess. Either way, there's just no meaningful change on this chart, right? Unless these buyers can find acceptance over this supply or sellers can find acceptance under this demand. However, on the way down, we have these guys to be looking at. And so, very little change has occurred today because we still just are trading sideways over the highs of this area of demand that's currently what is doing its best to support price. If you trade through this guy, then we have just this one left, and then this is pretty much one-way trade. So I would imagine then that if you were to consolidate here, trade through this guy, consolidate, and then trade through this guy, this part should be easy work for sellers. And if it's not easy work for sellers, that's also going to be pretty good information for us to know. Just like this, all of this one-way trade, if you'll notice how it gets wiped down, right? Where did the seller stall? This one-way trade area, once you lose this low, was pretty easy work. So that's a very similar concept here. This should be easy work depending on how far we fall. if we fall straight from here, right, exactly straight from here, and you use up a ton of selling power before breaking this low, then you probably don't see much follow through. You probably see a break with limited follow through. But if we consolidate here for a bit before breaking down to this low, this should be easy work for sellers. Okay, so we shall see. Moving on to the VIX here. So the VIX still holding over this 1544 level. Again, that's just the October 2023 level that's over here. And so as long as we are holding over that level on the VIX, well, then we're in a higher volatility environment relative to all of this move off of this October low. That being said, it's really still not that elevated, right? Typically, you consider 30 to be a high VIX reading, high volatility environment, and we're really nowhere close to that right now. So that is pretty much it for the VIX. I'm still just going to continue watching this 1544 level. You can see I have this alert set for just 1 time per bar, just so that I can get a good idea of where we are relative to that October low, because obviously it's the rally off that October low has been really strong. And so I want to know once the environment has shifted away from, once the volatility has shifted away from what we've been experiencing since that October low. All right, just want to pick up these little, clues, right, to help us suggest to us, whether or not the market is changing, right? What is the tone of the market? That's pretty much it. Oh, I guess we'll cover MVDA again. I forgot to check what Larry does again. So I wasn't supposed to do today. So yeah. Please excuse me. I still maintain down here is where I would want it. Like personally, I don't really care if I miss trades. And this is something that Dan talks about all the time. It took me a long time to learn this lesson from Dan, but once I did, it was like night and day. All of a sudden, trading decisions become a lot easier because, well, you kind of take pressure off of yourself to capture every single move. You don't have to capture every move. You only need to capture, or you should only strive to capture the trades that you have set up, right? That these are the trades that you take. Like if it's like if you're a basketball player, right? You don't just take every shot, right? As soon as you get the ball, right? You could be at half court or whatever. What are you gonna do? You're gonna pass the ball forward as opposed to like take any shot whenever you have it, right? So don't be that guy. You don't want to be that guy in the pickup basketball court who like never drives, never passes, just dishes it and just shoots it every time he gets dished the ball. I mean, don't be that guy, right? Nobody's playing with that guy. So that's the same thing with trade, right? Like, I mean, you're gonna have a hard time if you're trying to capture every single move. Just be very specific with the kind of trades that you like to take, and then just take those trades, and do not worry about, if you're in a chat room and people are talking about this or that or whatever. I promise you, trading is a lot easier when you just do what is best for you, which I guess is just like life. Right. Anyway, so I still maintain I would only really like it down here. I want these daily oversold conditions. If I don't get it how I want it, then I simply won't get it. That's fine. Alternatively, I am also interested in this play in a different way. If you see a decent amount of follow through here, come test the highs of this range, don't see acceptance above, and then get hourly oversold on a back test of 113.75. I think that's pretty reasonable for a play as well. That's me. I don't really care to do anything on lower time frames these days, but if you're more of a day trader, you can be looking for that as well for like hourly oversold. 5-minute oversold conditions for like an hourly higher low. Again, in the same location though, like 113.75 is really where you want to be. All right. So that's it. That is it. Curious to see what it looks like intraday. So you can clearly see problems there initially, and then you hold a back test of it. So that's pretty much it for MVDA. Moving on now to Bitcoin. So Bitcoin, honestly, day to day, very little is going to change in this chart probably. Again, all we really care about is this 2021 structure. As long as you're holding over 61003.36, then the point of control of this structure is being affirmed, or rather, this structure is being affirmed as demand, which is the case right now. You can't love these higher highs like in follow through. And I think, if you were to get another setup off of this point of control, I think it's reasonable. I would be very happy to take plays there. If just like over here, or just like over here, just like over here, you have extension into that test, then it's reasonable to be looking for a pass back over play. The last one that we shared publicly was Sunday, May 12th, if you want to check that out. But that's pretty much it. Space for a weekly higher low, not yet seeing weekly consolidation. Got to break under 63412.46 first before that will happen. And potentially a bit of a head and shoulders, eh? So that's pretty much it for Bitcoin. And then finally for Ethereum, again, very little change here. There's not much going on in crypto. there's plenty of opportunity to trade other assets right now. So I don't really see why things would get super hot for crypto yet, especially as like, there's a much better narrative, right, around the small caps right now than there is in the even more speculative assets like crypto. So, again, my focus is going to remain probably on the small caps. I really like that setup if it were to set up regarding the move back down to the lows of this 2021 structure. Basically, the opposite of this. I mean, this basically the same play for these lows and the opposite of these plays over here. But anyway, that being said, for Ethereum USD, shorter term, it's still just all about this local daily demand zone. They almost traded through the whole thing, but couldn't break through the low of the structure. That's why this trade zone that was shared on this weekend video on June 30th included some fills under this support, anticipating a potential break with no follow through, which is exactly what happened here, I think. 809.41. Yeah, so exactly anticipating a potential break with no follow through and, giving this trade a shot until they can find acceptance under 2717.89, which obviously they didn't do. So I still like this trade zone, but the extension is just not the same anymore, right? So it made a lot more sense over here than it did over here. Still reasonable, but I think we had much better EV over here the first go around when things were dumping from much higher up than here. Now that you have this consolidation before a test of this area. Okay, so that is pretty much it, I believe. If you got anything out of that, we would very much appreciate a like and subscribe. It would help us out a lot, costs you nothing. And that's pretty much it. If you're interested in joining a pretty robust community full of full-time traders who are, in here day in and day out talking about trading, setups, psychology, TA, sometimes just talking about nonsense, then give the community a shot. Links are in the description below. Otherwise, I hope to see y'all next time. Farewell.